Okay, good morning, everyone. Just want to welcome you to our webinar today. My name is Carrie Minnick, and I am the director of DWD's nonprofit service team. First of all, I just wanted to thank all of you for your continued support in attending our webinars. We began offering webinars in response to the pandemic and have planned monthly sessions through the spring of 2022. So you can check out our nonprofit education page to register for future webinars and see what those upcoming topics are about. Today's presentation on QuickBooks is going to be a little different compared to some of our previous webinars. We've invited Amanda Orsler, a CPA and manager in our office, to join as a guest panelist. Amanda has over 10 years of experience in accounting and works closely with many QuickBooks users. I will be facilitating the conversation with Amanda, and as we cover some of the best practices and tips for all of our nonprofit QuickBooks users. And many of the items that we're going to talk about today are actual items that we've noted working with our clients. And just so everyone is aware, we will be sending out a copy of the slides after the presentation. In addition, we will be sending out some specific instructions on the different things that we talk about today. So don't worry if we go over some things a little bit quick. We will provide specific instructions for both nonprofit desktop, QuickBooks Desktop and QuickBooks Online after the presentation. So with that, I think we'll get started. So just in general, before we really get into some of the quick tips, we just wanted to remind you why it is so important to keep records. Every nonprofit organization must maintain records to show that your organization not only complies with tax rules, but we really need to make sure that we're documenting the receipts and expenditures reported on the Form 990. So we really need to make sure that we're reporting accurate information to the IRS. And also to show that we qualify as a tax exempt status and should be classified as a public charity. In addition, the records allow us to evaluate our success of our programs. We can monitor our budget and also prepare financial statements as well as our 990. The IRS doesn't specifically say that there is a certain record keeping system that is required. You as an organization can really choose any system that appropriately reports financial activities for the year. It must show gross receipts, purchases, expenses, assets. It should also appropriately identify income and expense items that are attributable to each of your programs. And you must also maintain documentation that supports the entries in the books. And so we know a lot of our clients and a lot of nonprofits in general do use QuickBooks to record the transactions.
Good morning, everyone. I'm Amanda, and I'm going to talk a little bit about the different types of QuickBooks. There are two different versions that you may hear us talk about today, and that is the desktop version and the online. Desktop version is installed locally on your computer. It can either be on one single computer, it could be housed on a server for multiple users. There's a license that comes with that. You can use it for multiple years typically, and it allows for more automation, and I think that it does have some more robust reports that you can print. The online version is cloud-based. It's hosted on a website. There's monthly subscription fees that you pay, and it may have some features that you don't see on the desktop. So depending upon what your needs are, will really determine which version is the best for your organization. And if you're having questions about which one that is, here at DWD, we'd be happy to go over any of that with you. But then the next thing we're going to talk about is once you've decided which version you're going to use, is the first thing you need to do when setting up your company is to go ahead and put a password on that. Now, if you're using an online version, you're required to have a password. You have a username and password to be able to log on to that. And that is used typically with an email address. But on the desktop, you have a choice on whether you want to use that or not. We highly recommend that any individual that is going to be accessing the data have their own username and password. So don't be like sharing the admin password with everyone in the organization. That really helps have some good controls over the financial information. There is an error that on the desktop and on the online version, the admin user has access to everything, as well as being able to add users, control their access. The desktop allows you to really kind of hone in those limitations on what you may or may not want people to see. And then we want to make sure that you're keeping those passwords in a secure location. One thing we don't want to see is that one person has the password and then they leave your organization and nobody has access to the files anymore. Do make sure that, you know, it is in a secure location, but also that you have multiple people that can access your information so you never run into the case of being locked out of it. The next couple of slides are going to show you how to set up the users. So this snapshot is actually from the online version. You have a couple of different options. You can either be a company admin or you can be a standard user. With the standard user, you can then cut down on what you do or don't want them to be able to see, but it does count against your limit. So based upon the monthly subscription that you purchase at the time will determine how many users you're allowed to have. The bottom portion shows you users that you can add to the account that do not count against your limit, but they have very limited access. They're able to log in, they can view your financial reports, but they are not able to make any type of changes to the financial data. Another type of user that we see on the online version is an accounting firm. And this is where if you are working with DWD or another firm, where you would want to add somebody from that firm. It is a separate tab at the top. You click on, you put their email in and you can invite them. You can have up to 2 firms linked to your account. It does not go against any of your other users that you may have. What this allows is for us as the accountant to be able to get in and help you and assist you. If you're looking at something and you just have, need to make a quick phone call, we're able to get in and see what you're seeing in real time. One of the other things that the accounting firm can do that a normal user can't is they are able to undo a bank reconciliation, while even an admin user cannot. So if you were needing to have something, like you did a bank rec and then you found an error and wanted to go back and reverse it, you would want to reach out to whoever your accounting firm is listed on your online, and they would be able to assist you with that.
One other thing as you really are starting to set up your organization within QuickBooks, or even if you already have it set up, is the use of account numbers. So when you're setting up your accounts within QuickBooks, the default is to not have account numbers. So we just have a list of account names. And that's fine, but really using the account numbers makes it much easier when you're recording transactions. And just by using those numbers, it's also much easier to determine when you're looking at different accounts, whether the account is an asset or a liability or revenue or an expense item. Oftentimes, assets will start with a 1, liabilities with a 2, net assets with a 3, revenue with a 4, and expenses with a 5. This is not necessarily a requirement, but that's kind of a standard best practice. And one thing to notice also is that QuickBooks does limit the number of accounts that you can have. So just remember that as you're setting up the various accounts. And so this right here is a snapshot from, again, the online version of QuickBooks, and under the account settings. And again, we will provide specific instructions on how to do these different types of things, specifically where to go. But you can see here where you do have to click a button to show account numbers. I'm not sure why QuickBooks doesn't automatically require you to enter account numbers. It would be much more helpful. But we do recommend that you enable this, and so that you can add account numbers to your different accounts. And so here's just a quick snapshot of the different accounts. So here we have the different names, which you, I'm sure, already have. But over here, because we've clicked that enable account numbers, we are able to add account numbers here. And then we can talk about, you know, what type of account, whether it's a current asset, receivable, fixed assets, and so on. Again, we recommend using those account numbers because when you are entering transactions, journal entries, it's just much easier to determine that you have the right account. So for example, you might have an interest income account and an interest expense account. However, if you just call both of them interest, it's very difficult to determine if it's an income account or expense account. So utilizing those account numbers just makes everything a little bit more cleaner and more organized. Now, when you are setting up your accounts, don't make it any more difficult than what it needs to be. Depending on your organization, you may have certain accounts or use certain accounts that other nonprofits don't use. For example, revenue. So a lot of nonprofits will get contributions. So we've seen before where there will be a new account for every grant received. So if you get a new grant from Follinger, then there's a new GL account called Follinger Grant. Or if you get a new grant from the Community Foundation, then there's a new GL account called Community Foundation Grant. And while that does provide some useful information so you can easily see who has given you that money, it's really not necessary to include that at the GL account level. We recommend instead using more general accounts titles such as contributions-foundations or contributions-individuals. So that way you can see in total how many contributions you've received from different sectors, whether it be individuals, companies, foundations, and so on. There are other places within QuickBooks to track who specifically is giving you money, and we'll talk about that a little bit later. But when you're setting up your GL account, at this point, it's really better to keep it more simplified. Also, again, there are limits onto the number of accounts that you can have. So if you do tend to set up a new account for each item, then you may run into not having enough accounts for that. And when you are looking to set up your chart of accounts, one thing that you can use is the 990 as a reference. Obviously, at the end of the year as a nonprofit, unless you're a religious organization, you're going to have to file a 990 with the IRS. And so you're going to want to have information readily available to put your transactions into the 990 form. And so by kind of using the 990 as a reference when you're setting up your accounts, that's going to be very helpful at the end of the year. And so if we just kind of look real quickly at the form 990, these are the different balance sheet accounts that are listed on the 990. Again, there is no requirement that you have to have these specific accounts set up in your QuickBooks, that they have to be these specific names. But if you're looking for a place to start, or maybe you're reevaluating your current chart of accounts, these are kind of the basic accounts that if I was working with a brand new organization and setting up their chart of accounts, this is what I would start with. So we have some balance sheet accounts, and then revenue and expense accounts. So again, just kind of a template to start with, or to evaluate what you have. But again, if there are different revenue items that your board wants to see every month, different expense items, then surely you would have those different accounts on there. But again, you are limited as to how many accounts that you can have. Another tool within QuickBooks to properly track different transactions for different programs is the use of classes. So both the IRS and generally accepted accounting principles. So if you have an audit or review or compilation done at the end of the year, and also if you file your 990 at the end of the year, you are going to have to report your expenses into 3 functions: program, management, and general, and fundraising. So classes really provide a good way for organizations to track these revenues and expenses within QuickBooks. And so you can go into QuickBooks in the settings and set up the various classes. So again, under the accounts and settings, there is a button to check that's we're going to use the classes because this is not a default. And then once we have those implemented, we can start assigning different transactions to different classes. So you can see, for example, you can run a profit and loss by class. And this is just an example. And you'll note that the total income here doesn't actually total up above here. I pulled some of the line items out because I wanted to get just to provide you with a look at what you would see, for example. So we have program A, program B, management, general, and fundraising. So for example, we have salaries down here. So we have one GL account called salaries and wages. We don't have a salaries and wages program A, salaries and wages program B, management and general salaries and fundraising salaries. We only have one salaries GL account, but then we're utilizing the classes to allocate that total, the expense between those functions. So that way, when we look at the reports at the end of the year or monthly or whatever time period we're looking at, we can easily run a profit and loss by class and see what the individual classes are, individual programs, how much has been allocated to each, but we can also see in total. Normally there's a total column, it's just got cut off on this sheet. So we could see in total how much we've spent. So utilizing classes, especially for nonprofits, is a really good idea. And again, then at the end of the year, when you need to provide your expense allocations to your auditor or report them on your 990, you can just run this report and pull the numbers right off of this report by the different functions.
So toggling off of classes is using a project or a job when you receive a new grant. So while the classes can give us some allocation, this just drills down things even a little bit farther. And so if you have the online version, they call it a project. If you're using the desktop version, they call it a job. So when you receive a new grant, you can set that up as a job. And then you would put all of your revenue and all of your expenses associated with that grant towards that job. And then what that will allow you to do is you will be able to run reports based upon that job that will show you what each grant received and what went out with that and what balance you have. And so if you want to go back just one screen, this is just one of the settings that you would use on the online version to get this set up, and it's an advanced setting. And then this is a profit and loss by job. So what this is going to show you is all of the grants that you have outstanding, and it will summarize for you. And at the end, it should give you a total between all of them, or you can look at them individually. The other report that you can run then is called a job profitability summary. And the job profitability summary is going to show you by job the revenue, the cost, and the difference. This report can be ran across fiscal years. So if you get a grant at the end of 21 and you know the expenses related to it are going to happen in 2022, don't worry. You can change the parameters of the report to make sure that you are including everything that you would like to look at. You can filter these reports so you can look at only one grant at a time if you want. If there's a specific one you need to provide some information for, you can really kind of filter and make these reports do what you need them to do. If you're using these functions, hopefully they'll be able to help you get the information you need to get out in the way that you want. The next thing we're going to talk about is some duplication of customer and vendor names. And so something that we see is that you may be receiving from people at different times. And so maybe, or you have different people that are entering things into your QuickBooks. I think that's probably the more common one is you would see in our example, maybe I would enter it as Dan Smith but Carrie would enter it in the system as Daniel Smith. Well, now we either have two customers or two vendors that actually are the same person. And as we've mentioned before, QuickBooks puts a lot of limits on things. And so you're not, you are limited on the number of customers and vendors that you have. So when you have these duplicates like this, you are going against the limit that you have, which these limits are fairly high, but over time, you may find that you may hit it. So starting off on the right foot will really just help with that. But there's a way that you can fix this. If you say, okay, I want anything related to Daniel Smith to be Daniel Smith. You'll want to make Dan Smith inactive. But in order, that's one way to fix it, is you make him inactive. But if you want, because you're maybe like getting close to your limit, then you will want to change all the transactions related to Dan Smith and change them to Daniel Smith. That's the beauty of QuickBooks, is once you've entered something, it doesn't mean that it's going to be that way forever. You're able to go in and change it. Once you change it that there's no transactions linked to Dan Smith, you're able to delete that one and get that limit item back for you. The other thing is if you're trying to run reports at the end of the year, because maybe you want to send out letters to everyone that's contributed and you want to put a total on there, thank you for, your $1,000 donations this year. But Dan Smith may get a letter saying he gave 500. Daniel Smith may get a letter that says he gave 500, when in reality, they gave $1,000. Now you're printing extra paper, you have extra postage, you're not giving out a clean letter to your contributors. And it just helps keep things a little bit smoother. This is an example of kind of what we see in like a customer listing of where we would see duplicates and why they would be the same person. You may have different transactions in each one.
As you're starting to enter transactions into QuickBooks, one thing that we always recommend that you do is utilizing the memo or the description field. This just provides some additional information as to why you are recording the transaction. Specifically, when you're doing journal entries, make sure that you're changing this up for each line of the journal entry if you're putting multiple entries together in one entry. So let's say you do monthly journal entries that include, your amortizing, your expensing, your prepaid, and your recording depreciation for the month. Maybe you're doing those in one journal entry because that's just your one monthly reoccurring journal entry that you're doing. Make sure that you include a memo on each of those accounts line items so that you know specifically what that is for. Also, when you're putting deposits in or writing checks, making sure that you put in like the purpose of the payment, or when you're receiving it, maybe you want to put the donor's name, or if it's restricted for a specific purpose. Oftentimes this additional detail will help later on if someone has a question, or specifically if there's maybe a transaction that you're not really sure exactly where to record it, but you want to get it into your QuickBooks. By including a specific memo, then that way that will help later on if someone is questioning it. And here's just a specific example for when you're doing journal entries, where you would enter that for a description. And again, I know once I do something and then I sleep, I don't always remember everything I did the day before. So making notes is always very helpful. I know I've worked with a client before who she wasn't very, she doesn't have a strong accounting background, but when she put information into QuickBooks, she always used really good memos. And so I knew exactly what was going on. So if we did need to do a journal entry, I knew exactly where to put it because I knew what she was trying to do, because she did really good memos and descriptions. Also, when you're entering transactions into QuickBooks and then you discover, oops, I did something wrong. This date should have been changed, or I put it to the wrong account. Don't delete it. I know that QuickBooks is very easy to manipulate. I know that it's very easy to change transactions and delete transactions, but please don't do that. We really encourage you to make the corrections either by adding an additional journal entry or using voids and credit memos, because that provides better audit trail of what actually happened. Not saying that people that delete things and delete items in QuickBooks are trying to commit fraud, but that is something that it's basically an opportunity for people to do that. And especially when you see things that are deleted, it just kind of throws up more of a red flag. So we really encourage you to, when mistakes do happen, and they do, everybody is human, makes mistakes. That's perfectly fine. You might have to adjust something, but we really encourage you to use other options that are available as opposed to just deleting transactions within QuickBooks.
Just to toggle on that, going back to putting the memos in and voiding, when you void a transaction, the transaction is still there. The date is still there. The vendor name is still there. And you actually have the option to go down into your memo and put, I voided this because blah, blah, blah. Or you could put your initials that you're the one that voided it and the date. The transaction doesn't go away at that point. So you still have your audit history that there was something here. Sometimes I've even put in the memo, original dollar amount was blank because, what if I voided it and then I found out I shouldn't have? Now I can't remember what it originally looked like. So those are some good ways to make your corrections too, and maybe kind of help you remember why something happened the way it did. The next thing we're going to talk about is voiding checks the proper way. So it's very easy. I wrote a check back in June. It never cashed. Now they're calling me saying, can you reissue that check? So how do I fix that in my QuickBooks? Because if I write them a new check, now I have 2 checks out there. So when you void a check, which is what you need to do, is you do need to void it. But what that does is that's going to mess everything up, because now your bank balance is going to be off for all the months that roll forward, because you took that, you basically said that you didn't spend that money. So what we need to do to correct this is, it is okay to void the check. And I would put a note in the memo, voided check, reissuing on such and such date. And then you need to enter a journal entry. And here's kind of step by step how we're going to do that. You're going to put a journal entry in for the original date of your check. And then you're going to put your amounts in based upon the original check amount. And we've got some in here of how you find your accounts that you're going to put that to. One will be the checking account. One will probably be an expense account. And then you're going to enter a journal entry dated today. And that's going to reverse the entry that you made prior. And then you can create your new check to send out to your vendor. What this is going to do, it's going to look kind of funny the next time you go into your bank reconciliation screen. You're going to have all these transactions that are nowhere on the bank account, or they're going to say zeros. You'll want to click on the zeros. You'll have one on each side of your bank reconciliation. You'll have a check and you'll have a deposit. You want to clear those out and all of that. And you want to clear your voided check. And all of that will clear out the check in the bank and in QuickBooks the proper way. What this does, it allows you to void the check. It allows you to recreate the check, but it will also make sure that your bank statement balance remains what it should be. Your expense account balance remains what they should be as of June. It will also then make, so now it's October, it will make your October transactions be what they should be for October. You're not going to have additional expenses in October. You're not going to reduce your expenses in June. It's going to just bring you back to an even playing field. Now, I realize that this is a 4-step process to void a check, where in QuickBooks, you can click a button and it be voided and moved on. But just remember, if you only do step 1, you're going to change all of your financial history from the point of that original check to moving forward. Somebody just asked if there's a visual for the voided check. We have some step-by-step instructions that we can provide. If I can put a visual together that we can send out later as well with some step-by-step of what that process would look like, and include that with the handout. The next thing we're going to talk about is the use of budgets. And I saw a question earlier about if classes will show up in the budget area. And so we'll talk about that now too. And so being able to set up your budget in QuickBooks is going to allow you to be able to run a lot of reports straight out of QuickBooks and not be trying to manipulate things outside of QuickBooks. I'm sure most organizations probably have a budget that they do every year that they're working off of. And if you house it in QuickBooks, it's going to save you time and allow you, like I mentioned, to run some more reports instead of like keeping it outside of QuickBooks in an Excel spreadsheet that then you're having to update all the time. This is a nice function to be able to use. So QuickBooks will allow you to enter your budget month by month and by class. And what we recommend is that you don't take your budget for the year and just divide it by 12. We ask you to really think about your budget and, when are your fundraising events? Make sure those months look a little bit more accurate with where you think that those items are going to fall. Or maybe you have a heavy expense because you do a program at that time. Take the time to really kind of create the budget so that it can be useful to you and your organization. Our next screen here is going to show you what the budget looks like within QuickBooks. You can also create multiple budgets. So maybe you say, here's my 2021 budget, but I want to see what it would look like if we did this. You're able to have multiple budgets in there. My suggestion would be is once you have a final budget is to get rid of any additional ones that you have in there. So you see it's going to bring up all of your revenue and all of your expenses, and you have each month, and you're able to fill in what your budget is going to look like for each of those. And you can also do it by class. So when you click on class, then that screen will appear, and you will be entering your revenue and expenses strictly for that class. So if that's like what we mentioned before, if that's program A, it's anything related to program A. If it's general and management, it's anything related to that. And then at the end, you'll be able to have a full budget that combines everything together. The nice thing is that once you have that budget in there, the next screen will show you can run a profit and loss budget versus actual. So instead of looking at your financials at the end of the month, trying to input that into your budget spreadsheet so you have something that you can present to your board, you can run this report and it's going to have all the information right there for you. And you don't have to do any manual manipulation. You can get a quick look at where things are, if you have differences. In both versions, you should be able to click on the actual and it expand and show you what makes up that number. So if you have questions like, if you look at this line here, our federal grants were 150,000 and we thought that they were going to be 750,000. Well, you could click on that 150 and see, well, I only got this and this, and I thought I should have had maybe these 3 others. Being able to take your time to kind of look into those things will give you more time to be able to do what you need to do within your organization instead of trying to format spreadsheets.
And again, as Amanda mentioned earlier, QuickBooks has a lot of different reports that you can utilize. And this budget to actual report here shows it by month. So we have like January months to budget just for January, and then February just actual to budget. You can run this report like this, or you can run so monthly, or you could run it year to date. So let's say you're a December year end and it's October right now and you want to see January to September, you can run it year to date. So there are a lot of different reports that you can utilize in QuickBooks to help you guide your organization. So that's one of the reasons why it's so important to put that budget into QuickBooks so that way you can use those reports.
QuickBooks has a nice feature. We see it more with the online version, but you can actually do this with online or desktop. And that is the use of the auto bank feed. So you might think, oh, that sounds really great. I can just click a button and QuickBooks is going to suck in all my bank transactions. I don't have to enter everything. You may find that it causes more headache than not. And the good part about it is it'll save you time. As far as dollar amount, you're not going to have data entry errors because you're not manually entering it. The cons with this is duplicate entries. If you have created a customer invoice and they've paid it, it's better to link it if you do it manually to apply the money to the invoice, and then the same with payments. What we see is that, okay, I paid an invoice. I did it through QuickBooks. I wrote them a check and I've put it in there. And then the bank feed comes in and it tries to put that check back in. And then that's how we see the duplicate entries. Or maybe I recorded this deposit. Now QuickBooks is trying to put this deposit in, and now I've got the deposit in there twice. And what happens with the bank feed is if when you go to do your bank reconciliation, you clear off the manual one that you entered, but not the bank feed, that bank feed will continue to try to be added to QuickBooks time after time. So we highly recommend not using that feature. While it does seem like it would save a lot of time, I have seen clients have to go back an entire year and redo bank reconciliations to try to clean this up. And I just don't think that it saves the time that you would hope that it would. The next thing we're going to talk about is using a credit card account. Many organizations and businesses use credit cards as a way to pay for things. And the best way to handle this is you kind of almost set it up like a second bank account in your QuickBooks. And QuickBooks has functions for this, and it works very well. And you can go up, if you're in the desktop version, you can go up to banking and enter credit card transactions. And that is going to be no different than like entering a bill or a check. So you can put your vendor in there, who you purchased it from, you can put the dollar amount, the date the transaction happened, and then you save it. And then you do the same thing when you pay the credit card. You can do that through your bill pay, like your other vendor checks. The other thing that's nice about the credit card account is it does have a reconciliation feature that looks just like a bank reconciliation. And so you are able to go in there when you get your statement and you can enter the ending balance. You click off the transactions that are there. You click off, the payment that you made, and hopefully you get back to zero and are able to have good records then of the use of the credit card. That's a good documentation process to have, is that you've entered everything and you've reconciled it.
Amanda, should they be entering these credit card charges as the credit card charges occur, or should they wait till the end of the month to enter these transactions?
I would recommend that you enter these as they occur. Don't wait until you get your credit card statement. The way credit cards work is you always are a month behind. So you are missing out on potentially almost an entire 30 days worth of charges that should be in your account. You've incurred the expense, it should be there. So as you have people using the cards, have them turn in receipts. And if once a week you enter them, just get a good system going so that you've got some real-time information. And this is just a snapshot of a credit card account with some details. So typically underneath type, you may be used to seeing bill payment, journal entry. When you enter a credit card charge, it will actually show credit card charge type. And if you have a credit card set up in QuickBooks, credit card charge and credit card payment are really the only types that you should see associated with this account. So now we're going to talk about when you pay things online or you have things, directly taken out of your bank account. Maybe you have your utilities come out on the 15th of the month every month and you don't have to write a check. It just happens. How do I get that in my QuickBooks? So you want to go in and just go to banking, write a check. And you might be thinking, but I'm not writing a check. Well, that's how we're going to get it into QuickBooks. Instead of putting a check number, go ahead and put ACH, EFT, debit card, online. You'll go ahead and enter your information. You'll put your expense in there and your dollar amount and save it. That will record it in your checkbook in QuickBooks and record the expense. It will also make the item come up in your bank reconciliation when you go to look at that monthly. The other thing is when you transfer money between bank accounts. How do I tell QuickBooks that I move money? There is a really nice feature in the banking area where it says transfer. Please use that. If you make a deposit, it can get kind of messy, but if you use transfer, you can select, here's my bank account 1, here's bank account 2, this is the amount I'm going to transfer, and it will make the entry for you. Next, we're going to look at performing the bank reconciliation. You want to make sure that you're doing that monthly and on a timely basis. Don't wait till the end of the year to try to do all of them. Once the bank account is reconciled, for the most part, you pretty much know that you've got your income and expenses in for the month. You should have a good feeling that most of your activity is in there. Check dates in QuickBooks should be the actual dates of the check. So don't cut your check today and then date it for the beginning of next month. Make sure if you're cutting your check and mailing it today, it's got today's date on it. Activity for after year end should not be cleared in the bank reconciliation if it has not cleared the bank. January activity should not be cleared as of December. So sometimes what we see, and this is going back to your check dates, okay, I cut the rent check on January 1st. I might have put it in the mail the last week of December. The landlord got it, they went ahead and cleared it. Well, now when you do your bank reconciliation, you're going to have a January transaction cleared, but that expense is in January, not in December. And so you want to just be careful of that and make sure that everything you're clearing is for the current month that you're working on or prior. If a transaction has cleared the bank statement, so you've done your bank reconciliation, I've said that check cleared, and now I need to void it, or maybe you want to delete it. You don't want to do that because, again, we're going to go back to when you voided checks previously. If it has cleared the bank, that probably means it needs to stay in QuickBooks, and we need to look at another way to make the correction that you're trying to make. QuickBooks will give you a warning when you try to do it, so don't ignore it. That's probably a good time to pick up the phone and call one of us and say, hey, this is what I'm trying to do. What's the best way to do it? And we'll help you work through that. The next thing that we see sometimes is in accounts receivable and accounts payable. In total, the balance may be correct, but things aren't matching up. So maybe I I sent a customer an invoice or a contributor an invoice for $500. They sent me a payment and I recorded the payment, I recorded the invoice, but I didn't match them together. So that's going to kind of sit out there. It's going to show them on aging reports. It's going to show that they don't owe anything. But what we want to make sure that we do is that we apply them to each other. And so, just looking through your AR and AP and making sure that they're linked. Another example would be you purchase something from a vendor and they credit you, you returned it and received a credit. So you enter the bill and then you enter the credit, but you need to tell them to talk to each other and say that this credit goes with this bill. And there's a function when you're in the bill screen, it's up kind of towards the top that says apply credits. And you can click on that and a box will appear and you can put a check mark and link them together. Once they're linked, the transaction is complete at that point. You've entered your invoice, you've entered your credit, you've made them talk to each other, and it will clear out on reports. So this kind of shows you what you might see on an AR aging where we've got an invoice up here for $60,000, but they paid it. Well, we need to tell them that they go together and then those will clear off this report. So, this step really is just for your benefit when you're running reports that you've got a clean report and not a bunch of stuff in there that's kind of making everything messy.
Along with bank reconciliations, we just want to note that, QuickBooks has an awesome tool to reconcile your bank accounts within the system, which is great. However, once you do that, we really want to encourage you to either print those reconciliations out on paper or maintain them electronically outside of QuickBooks. So, you should have some kind of retention policy in place. So you want to make sure that you're following that as far as how long and where you're saving documents. But not only that, but you also really need to have someone review and approve the bank reconciliations. And it's very hard to do that within QuickBooks. So either print them out, or if you want to maintain them electronically, that's certainly fine as well. We've seen lots of clients, organizations that utilize PDFs and have a super system in place for review. So just a reminder to maintain, once your bank reconciliations are done inside of QuickBooks, to actually maintain those documents and showing that they are approved outside of QuickBooks in a manner.
So the next thing we're going to look at is payroll. And I realize maybe not everyone on the call is using payroll in QuickBooks, but if you are, just a couple of things to go over. When you're paying your payroll taxes, instead of just writing a check, after you complete your payroll, it creates all your payroll liabilities that are due. So you want to make sure that you're paying those through the pay liability screen. So if you're on your payroll screen, you've got multiple tabs at the top. One says pay employees, one says pay liabilities and file forms. You want to make sure you go to that pay liability screen and you're creating your checks through that process. It's going to release the payment. It's going to make the transaction in QuickBooks for you. It will print out a check if that's what you need. Or if you went online and paid it through EFTPS, that's where you're going to create the check and make your check number EFTPS and get that recorded. The other thing that we want to talk about is your state unemployment rate. That changes on January 1 of every year, and it may go up or down depending upon your organization and situations. What you want to make sure that you do is prior to running the first payroll, and so for us now, we're going to be looking at 2022. Before you run your first payroll in 2022, you want to make sure that you go into your state unemployment payroll item and update that percentage. The reason you want to do it before your first payroll is because if you don't, your state unemployment is actually going to calculate incorrectly the rest of the year. So going ahead and getting started on the right foot in 2022 will make sure that when you run your reports and run your pay liability screen, that you've got the right amount in there. And then we want to talk about setting up your invoices properly. So this has to do with if you're using the customer feature and creating invoices. Like we've mentioned, you have limits on the number of items that you can have. And so when you use invoices, you create an item. So maybe that says contributions. You want to make sure that that item is being mapped to the correct revenue account that you want it to go to. The reason being is then when you create your invoice and you click save, it actually creates an entry in the background, and it's putting that dollar amount into your revenue account. So if you have your contribution item going to an expense account per se, then your expenses are going to start to look a little off. So you want to make sure you have it going where you want it to go. Now, one nice thing is, let's say you've been using this item and you've been having it go to this revenue account. And then you say, well, I want to break things out a little bit more and have some sub accounts. So I want to start using, I want this item to go to this account, this item to go to another one. You can change it as you go. So if you say, now I want it to go to another revenue account, you have the option to edit your item, map it to a new account, and you have two choices. You can either say, I want that change to be made as of today and moving forward, or I always wanted it to be this way, and it can change all your previous transactions as well.
The last thing that we just want to mention is the Ask My Accountant GL account that's in QuickBooks. So QuickBooks has a default account called Ask My Accountant. This account is really for items that you are unsure about. So maybe an unusual transaction happens during the year and you're not really sure where to record it, but you really want to put it on your book. So you record it to the Ask My Accountant GL account, which is fine. However, you want to make sure that that account is cleared out at the end by the end of the year. So really follow what it is. It's Ask My Accountant. So if you're not sure and you put something in there, ask us. If you're unsure how to record something, please contact us or your accountant. It's much easier to address things during the year when they actually happen, as opposed to the end of the year when we have to go back and think, okay, now why did we record that there and what exactly happened? So using the Ask My Accountant GL account is fine during the year for short periods, but we just want to make sure that we get anything that's been recorded into that account reclassed to the proper account by the end of the year. We have just a few minutes left. I want to first of all say thank you for attending today's session. And the last slide here just has both Amanda and I's contact information. So if you have any questions, feel free to contact us. Also has some information here about some other services that we offer at DWD. We have a specific nonprofit group that works solely with nonprofits. So if there's anything else that we can do for you, we would love to be in touch with that. We do have a couple other questions that came in, Amanda. Are you familiar with tags in QuickBooks? Can you tell us what a tag is?
Yes, so I do believe tag is used in the online version, and think of it like an abbreviation is my understanding of it. So maybe you have DWD as a vendor and you have it typed out as Doolin, Warden, Dewald. You could put a tag and shorten it to DWD, and then you could just type DWD in, and then it should generate like the full length name, is my understanding of it.
And then
I have not used tags. And I don't know if I have any clients that are currently using it either.
And we can certainly look into that and follow up with you as well. The other question that we had, as far as when you're entering a bank deposit, is there a way to preset one income account so that you don't have to type it in repeatedly on a lengthy bank deposit? Can we preset an income account?
And I see that that is referring to the online version. I have a quick answer for the desktop version, and that is you can memorize transactions. And so you can go to your memorize list and it will just pull up the transaction. You can have some pre-filled options in there. As far as online, I'm going to have to look into that one. I'm not sure how memorized transactions work online, or if it's an option, or if it's called something else. But I can definitely look into it and get back with you.
And again, we'll look into both of those, and we will also provide a copy of the slides and then also instructions on things that we've talked about, setting up classes, setting up different users profiles, specific instructions for both the online and the desktop version. We will make those available. So that way, if you only use online, you can just worry about how to do it online. So unless anyone has any other questions at this time, we again thank you for attending, and thanks to Amanda for joining us